Everyone, welcome to a new episode of Crypto Tips. Today I have a very special guest with me, Ernest from decrypted.tax. Thank you, Ernest, for joining us today.
Good to be here.
So today we got a ton of questions from our Patreon members. Actually, if you guys want to check out our group, it's patreon.com/cryptotips. And our members are sent in a ton of questions for Ernest today to talk about tax preparations, what to expect if you are a US citizen dealing with the IRS and your cryptocurrency investments. So we got a ton of topics to go through. So let's get to it. So I know December is fast approaching. So a lot of people want to know how they can set themselves up for the incoming year. Also the US and the regulations on crypto constantly changing, it seems. So we're going to be getting your insights on all of that. The first thing that a lot of people want to know is talking about things like staking coins. If you're participating on DeFi, getting passive income from farming, airdrops, how are these types of income being classified and how are they being taxed in the US?
The first thing to remember about US federal income tax is Section 61 of the Internal Revenue Code defines income as income from any source derived. And so when you have dominion and control, they call it, over the asset, then it becomes income. So in staking, when you have a staking reward or you have an airdrop, as soon as you have control over that asset, that's when you have a taxable event, and that's when you have income. And the income is determined by the fair market value of the asset that you receive.
So is that like at a zero cost basis because you didn't particularly invest directly buying that airdrop or those staking rewards?
It is. It's at a zero cost basis, but if you file a Schedule C with your income tax return and you have expenses that are related to that income generating activity, those ordinary and necessary fixed and determinable expenses offset the income that you have from the sale of a particular asset. So when you have an airdrop, you have that airdrop, but you might have expenses. You can have an office expense, computer expense, internet expense. Those expenses can offset your income from airdrops, from DeFi activity, from staking.
I wonder if your purchase of the coin that qualified you for staking or those airdrops, could that be possibly used to offset that as well?
The fees that are associated with the purchase of the assets can be used to offset the income that's generated from the activity.
Finally, those high Ethereum fees are going to pay off.
Right.
Similarly, what is happening with BlockFi and the income you can earn from lending your coins? Is that a similar situation?
It is a very similar situation. It's the same thing. Income is determined when you receive the interest from BlockFi. And so when you have dominion and control over that asset, that's when you have income.
Okay.